Hello, good morning, everyone. So let's have our daily briefing for today. And let's have a quick market recap on yesterday's data. Okay, so first things we have the consumer confidence for Eurozone for the month of September. So the previous data is -4 and forecasted at 0. And for the actual data, it's still unchanged at -4. Followed by the pending home sales for US monthly basis for the month of August. So the previous data is -2%. And the market forecast at 1.4%. And the release time last night, 10 p.m. And for the actual data, it was 8.1%. So it beats the market forecast and the previous data as well. But however, for the dollar index, this one did not create any significant move after the release. And we also have the crude oil stocks change. So the previous data is negative 3.481 million. And the market forecast at negative 1.652 million. And the release time last night, 10:30 p.m. And for the actual data, it's 4.758 million. So still, the price of oil still traded above the 75 territory. So still, the demand of oil is still high for this week. And for today's economic data, during the European session, we have the British pound GDP yearly basis and quarterly basis for the second quarter later at 2 p.m. and followed by unemployment rate for Germany for the month of September. And 5 p.m. we have inflation rate monthly basis and yearly basis for the month of September for Germany as well. And for the US session later at 8:30 p.m. we only have the weekly initial jobless claims. And for our key product for today, we have the British pound against the US dollar. Okay, so the current price of the British pound against the USD is currently around the 1.3450. Now, the pound dollar is actually not looking pretty for this week. So the price fell for almost 250 pips since Monday. So one of the catalysts that pressured the price of the British pound against the USD is, of course, the stronger dollar yields for this week. And also, just in case you didn't know, the UK is currently suffering from a significant global energy crisis. So currently, they lack of demand of oil as of this moment. And because of that, the price of the British pound remains pressured for this week. And my personal opinion is if the price is still traded below the 1.36 and 1.35 territory, then it may go lower or it may extend losses as of this moment. And it looks like the current price of the British pound is aiming for 1.34 territory or even lower for this week. An alternative scenario is if the price of the British pound moves back around the 1.3750 or it may trade it above higher than this price, then it looks like we can see a clear bullish momentum from this pair. But as of this moment, I cannot see clearly if the price will go up around this 1.3750. But overall, as long as this pair traded below the 1.36 or below the 1.35, then I will remain bearish for this one. So we can also see a strong based on the moving average. So this one is 50 SMA. And this one is 200 SMA. So this one, or the blue line right here, this one is the 50 SMA. So it crosses below the 200 SMA, and it indicates that there will be a bearish momentum from this side. So overall, again, I will still be bearish for this one as long as the price traded below the 1.36 and 1.35 territory. So again, during the European session, we have GDP for UK yearly and quarterly basis for the second quarter, and unemployment rate for Germany, and we also have the inflation rate for Germany as well. And for the US session, we have initial jobless claims later at 8:30 p.m. All right, so thank you everyone for joining our daily briefing for today. Stay safe and have a great day.